Okay, good evening, everybody. I think that's close enough. And it is past 8 o'clock. Hope everyone's okay. Hope everyone is good. Let me just prefix tonight's call with there is probably 0% chance that I don't get interrupted. My son is not asleep. He's only just gone to bed. My wife's about to nip out. And so he's just going to walk in. I know he is. And yeah, we'll just have to roll with it as and when it happens. But anyway, we'll see what goes on there. Tonight, what are we going to talk about? I've alluded to this for a couple of weeks, and that is Bank of Japan and potential interest rate increase. And I've kind of put off really going into it until this week because the announcement, if it happens, is due this week, and so the implications of that should become apparent. Either they're starting to, or they will in the near future. So we're going to go over that. We're going to talk about how potentially Japan might actually ruin Bitcoin's Christmas, certainly might upset our Christmas dinners. And we'll try and see what's happened in the past, where that's going to go for the future, and kind of take it from there. Other than that, we'll go through Bitcoin, we'll go through BitTensor, we'll have a look at some of the other things, and we'll just ultimately kind of just give my thoughts on where we are with the market, which if you've been watching for the last few weeks, not exactly in the best position, but there's always a chance that could recover. As always, if you have any questions, feel free to dump them into the chat, and we'll go from there. Right, okay. Bitcoin 3-day time frame. You've got all the other charts here. I'll tell you what, we'll go a bit different. We'll start on the bottom three because there's actually nothing for me really to say on them. Bitcoin dominance just moving sideways. No real discernible action on where that's going, and it's neither good nor bad in terms of giving us confirmation on an alt season or a Bitcoin season. I don't really like the look of Total 2, and if I'm going to be perfectly honest with you, don't really like the look of BitTensor either. I'm sure you can see from the charts there. We're going to go in more detail with those later on, but that's where it sits. We now turn our attention to Bitcoin 3-day time frame, and we were sort of up last time we spoke, up and around the top end of this sort of channel, 93,000. We were waiting for that to break. Unfortunately, it broke, but it wasn't able to maintain the momentum from there. And we can actually see it's come all the way back down. It's tipped us down at about 86.5, actually broke slightly below it. But we have now climbed above it. I think we've still got a day and a half to go on this candle here. And even if we don't retest that bottom level, we can safely assume that channel has been filled. And the next real battleground has to unfortunately be for us that 86.5 level, whether or not we're going to stick the landing above it, or if we do, unfortunately, fall below. We'll go into some other TA on this later on, but right now this isn't particularly looking too great for Bitcoin, regardless of what we may talk about Japan and everything else. Just in terms of the structure, we've had that high back in October, we've had the market come back down, we've had some sort of correction to previous support resistance, and then we've had a failed attempt there. Now, we haven't lost that level, but if we were to lose the level around 86,000, people will be starting using terms like dead cat bounce and all sorts, and then we'll be looking at levels to the downside. So I think we need to just take that into consideration. Unfortunately, we can't ignore what we see within the charts, and even if we do get some positive momentum from there, until we break 93,000, yes, I'll be excited that we've got above 90, but until we actually break that 93,000, I'm not really going to be talking about bull market resuming and where this can go. So it's not looking the best in terms of that position. We'll get onto charting a little bit later on. I think we'll just tackle. Sorry, hi there, everyone. This chat was covered up, so I didn't see anything. Okay, just everyone saying hello to everyone. So I think we'll just get talking about Japan, and then we'll kind of go from there. So I just found any news article that happened to mention Japan's rate cut and Bitcoin's price. So ignore the headline. I'll move over onto these later on. We will talk about some of these other ones. But for those of you that have not turned on crypto Twitter, you're not been on YouTube, or you've just slept under a rock for the last week, you may not be aware that actually the Bank of Japan has given the strongest indication it possibly can that in their central bank meeting, they are looking to increase their interest rates. Now, why is that an issue? And I'll try and explain this as quick as I can. I think it's been covered by me and others numerous times. But Japan it's an economy like no other in the world. For basically the past 3 decades, Japan has just had zero inflation. Matter of fact, it's tried to create inflation, and to do that, they've been they've been suffering from deflation, but to try and increase that inflation, they've had either zero or next to zero, and sometimes in some cases negative interest rates. And the problem with deflation is that ultimately prices remain flat, or they ultimately are falling. You have that issue with weak economic growth, and there's no real pressure on wages. Ideally, that sounds fantastic, and it is if you can keep that utopian thing going along. But ultimately, things may come a cropper. Now, over the past 30 years or whatever, the issue has really been that because there is zero interest rates, the Japanese yen has ultimately become, the funding or the loan currency of the world. And so other nations, businesses, large institutions have effectively borrowed against the yen because it's effectively free money with next to zero interest rates, or those weird times where there's a negative interest rate, actually getting paid to do it. And then they've been able to, put that money into other risk assets. And it also gave the Bank of Japan itself the opportunity to effectively go along and just buy other countries' government bonds, ETFs, equities, whatever, maybe even a little bit of crypto, who knows. And we'll touch on it later on, but this is a big problem because they are so heavily invested in other people's or other nations' government bonds or debts, effectively. Now, what's going on and why is that all about to change? Well, suddenly actually Japan started to feel the real pinch of inflation, and we may only be talking about small levels of interest rates, laughable by every other economy out there, but it is showing genuine real inflation. And so prices are rising, the wages are effectively rising. I suppose the yen is weakening, which effectively makes imports more expensive into the country. And so ultimately that creates sort of not just inflation, but kind of a sticky sort of inflation. And whereas in the past, because they've may have been susceptible to some of those criteria, that the banks have been able to just say, well, let's just wait it out and ultimately see what happens. Now what they're actually having to do is we don't have that ability to wait it out anymore. We've got to try and control inflation. And what's one of the key things we know to try and curb inflation? That is to increase interest rates. And so they are talking about a further 25 basis point interest rates, taking it to 75 basis points. Yes, a measly 0.75%, which, as I mentioned, might be laughable for other nations, but you think about the US's mandate to get it down to 2%. But for Japan, obviously, that is a seismic, no pun intended, sort of move up. And I suppose that's where it starts to impact other nations or sort of the global economics. Sorry, I lost my train of thought there. Because I have gone and lost my train of thought. Because, well, first and foremost, let's tackle sort of Japan being sort of the largest holder of sort of US treasuries. I think they have over $1 trillion worth. I got this data off foreign holders, major foreign holders of the treasury securities. The last date here is September 2025. You can kind of see Japan in the top line here, $1,189 billion, so 1.2, just there or thereabouts, trillion dollars worth of US debt. And for years, Japan has helped sort of, by buying up all of this US treasuries. They've been helped to suppress sort of US yields and support that kind of global, ultimately, liquidity. But what we're now seeing, I've missed a point that I wanted to talk about, so I'm going to have to go back and talk about that. But ultimately, what we're now seeing is Japan. I have missed a point. Let me go back. Sorry, let me go back. I did want to talk about something else prior to that. What we've got is, I'm getting all flustered now because I've just seen my son get out of bed, but my daughter's gone to rescue him. what we've got with the increase in interest rates, and let me get some of these charts up. That's going to kind of help me sort of, oops. Why are the charts I'm looking for? I've gone and lost them. Sorry, my internet's also gone slow. Come on. Okay, right. We're just going to have to leave it on this. The internet is slowing down massively. So let's go to increase in interest rates. What they would then typically call ultimately lead to an increase in unwinding of the carry trade. So those people that originally used to take out relatively free loans by converting into the yen now ultimately have to pay an interest on them. We're not talking about you just taking out $1,000 worth. We're talking about billions of dollars worth of loans that effectively been paid out with no repayment requirement, or certainly no interest on the repayment. And now they're sort of realizing that, okay, that is suddenly changing, and an additional 20 or 25 basis points, 0.25% of is going to have a massive impact on the payment terms that they're currently in. And so companies, nations, etc., are likely to start to actually have to sell whatever risk-on assets they've gone and bought so that they can convert it back into the yen to obviously pay off their loans. Now, they're either selling off sort of profit that they've made on that initial investment just to pay off the extra interest, or they're kind of looking at, well, this isn't actually as attractive as we once thought, so we're just going to close that position, totally repay the interest rate, and have a look at where we can invest on that. Now, the other thing about increasing the interest rates when it comes to sort of Japan is the impact that it actually has on their bonds and effectively the yield that you get on their bonds. So typically the Japanese sort of long-term yields been relatively low because the interest rate has been low with it. But as that interest rate increases, what you get is that the investors who actually want to buy US bonds, they want a greater return for what it is. So that yield suddenly goes up. And the interesting thing that you have there is that suddenly actually holding on to Japanese long-term bonds, because the yield is increasing, it's not saying it's going to be ultimately and straight away a better investment than buying US bonds, but as that gap sort of narrows, what you sort of get is almost a sort of a slower interest in nations like Japan, who are the largest holder of US government bonds. They're actually not as interested in just flooding everything straight to the US bond market, and they might slow that and actually favor buying their own bonds, which again sort of kind of rebalances, I suppose, sort of where that distribution is. Now, it doesn't mean that everything's going to stop. We're going to suddenly see mass selling and exodus from Japan of the US government bond. Of course not. But as that gap sort of shrinks or comes closer, there is that volatility. And I think what people kind of forget, or maybe not forget, but they sort of, again, just brush past it, is this is, for me, the volatility is very short term, and it is short term. We'll look at it in the sort of the terms of the history, but actually in the medium to longer term, this is going to ultimately be good for risk on assets and for Bitcoins. That sort of stability and that kind of like clear out of where things are start to pave their way through. But in the short term, with concerns about whether it be risk on assets sort of liquidating positions, whether it be how Japan is going to be looking to sort of buy their own bonds versus other nation bonds, etc. It does create that nervousness in the market, hence the volatility there. Hopefully I've not lost anyone at the moment. Yeah, surprising to see that the UK is second place. Now, just that was in reference to this. I actually don't know if October and November's have changed any of those, but the UK was quite significantly higher than China, and then it starts to drop off quite quickly after that. Right, so where did I get to? The interesting bit that we kind of have to also talk about is the fact that what are the Fed doing? Well, the Fed are actually, they're cutting rates at the time that the Bank of Japan is potentially hiking their rates. And we actually know that Trump, he's pretty impatient. He wants to cut even faster, maybe making some massive swaves of cuts next year. We'll have to wait to see as to when Powell steps down, who replaces that. But that compression, as the dollar weakens and the yen strengthens, sort of leads to that carry trade unwind we talked about, but leads to that sort of rebalance of how risk assets are being assessed globally. Hence, as I mentioned previously, the volatility that ultimately comes with that. My son is back in bed. Good news. Let's hope he stays there. And I suppose the impact that has first on stocks and then potentially on Bitcoin is we get that sort of equity volatility that we sort of talked about. Then, that's sort of the main risk on asset. Funnily enough, although Bitcoin and crypto is that risk on asset, I always think that there's kind of some sort of I don't know, confidence that has to be attached to it. So crypto and Bitcoin's looking great when the markets are all fully confident, but a little bit of fear in that market and it really struggles like we see at the moment. So it's certainly having that way there. So if we start to kind of have a look, I was supposed to go through some of these as I was talking through, but got a bit carried away just staring at my son's baby camera. Although he's not a baby anymore, I just put it on so I could see him. So we don't really have an official chart like we do for the US federal rate, but going on to good old Poly Market, 98% chance that the announcement on Friday is going to be a rate increase. And we're going to talk about sort of the impact of basically the markets knowing what that is ultimately a little bit later on. In terms of the data, we kind of gone through where Japan is there, and then we can kind of have a look. And we're going to start to talk about sort of the carry trade. Now, for those of you that have been in crypto for the last 2 years, you will have experienced a carry trade unwind. It was pretty drastic, and that happened in August of 2024, which, yet my head's not covering it. It's this on the left-hand side. And that was an interest rate increase from maybe 0 to 0.25, I think. I'd have to just go and double check that. But you can kind of see, this is actually Bitcoin's price action here. And there is two here. It's actually the one on the right-hand side. It was a 27% price drop off the back of that interest rate hike. And if we actually go onto this chart, not that chart, let's just go onto this one. I will find it. So what we're talking about is this here. This was that carry trade unwind. And the point being, everyone refers to the carry trade unwind as happening on the 4th or the 5th of April, Monday, the 4th or 5th of April, which is this red candle here, wicked all the way down. That's when Bitcoin got sub 50,000. But actually, you'd be surprised to know the rate announcement was here. It was on, actually, I think it was on the Friday. So it was like here. Friday the 26th of July, the markets, as in the traditional markets, found out about it or reacted to it on the Monday. And look what happened. Massive rate drop all the way down. We'll go over this a little bit later on. We had a similar one announced in January 2025, right here. And this took us all the way. I mean, it was prolonged, this one, because of the tariff news as well. But this sort of like ended the inauguration, which, by the way, was the same time, sort of hype. And then the market suddenly massively corrected. And yep, people may want to associate that with Trump. I'm not really bothered. But the point is that actually the rate hike happened at this time. The market's corrected. And it wasn't just Bitcoin. You can have a look at these markets as well. So we had same date that it started, this in January. Yeah, okay. Then we had tariffs, which really took us all the way down. But we still had that huge correction. And this correction on the NASDAQ, initially, 15%. I mean, when we actually bottomed out, 27%. So massive correction down there. And similarly, it's actually even on this chart. We can kind of see from this one. So again, another 17% correction down. So it has had the last 2 times that it's occurred, and as I've mentioned, this thing doesn't happen that often. It has caused seismic moves, again, no pun intended, on the market. And we look at the NASDAQ at the moment, and over the past, 4 days since these rumors really firmed up, we have seen the NASDAQ start that correction. Now, it's too early to tell whether or not this is actually being priced in. Of course, it's too early to tell how we're going to know. We are actually, unfortunately, going to have to wait until Friday. And it will happen in the early hours UK time Friday morning. So we will have the Asia session to have a look to see what happens. We'll have the UK and the US session to really get a feel for how the markets have reacted to it. But don't be surprised if it also, over the weekend, when people start to really digest what's happening, we come Monday and we start to see how this one sort of plays and comes through. And this was, I saw this on Twitter. I've kind of created it ultimately myself. But as I mentioned, Thursday, it was kind of pretty much confirmed in a speech that was made by Chairman Ueda, I don't know if that's how you pronounce his name, that they were, going to do this rate increase. And then this is on the hourly time frame. This is Bitcoin top left. We've got the NASDAQ top right. Bottom left, we've got gold. And we've got the S&P 500 on the bottom right. And this is market opening, US times. And just look, off that news, I appreciate there could be many other things. But, bang, that news is kind of confirmed in the early hours of the morning. Market's open. And what's the first thing that happens? Just a big correction. Now, some of that was initially recovered, and then we know where Bitcoin's price is at the moment. So that's kind of gone by ultimately the wayside. But ultimately, I'm putting this together and saying, well, carry trade unwind is a big impact. How global economies have used the Japanese yen for the past 30 years has just become systemic with trading. It's just been a foregone conclusion that you can basically use their currency for the next and nothing. And 3 decades worth of habits are die hard. And also ultimately, when the reality of interest rates come in, that is going to impact people. And yes, okay, some people may be trying to value that and to position that beforehand. And there'll be people on Twitter that will try and convince you that we've been talking about it for this week, so it's already priced in. But it's still, companies have still got to react. Governments have still got to react. Everything is kind of slow. It doesn't just react because Twitter has happened to have announced it first. And so that confirmation likely to come on Friday. Then we'll start to see that reaction happen. I was trying to get rid of this repay whilst we were. Let's just see. So yeah, so we can kind of see now where everything sits. So I'm trying to put them all in the middle of the charts. So nothing's really, with the exception of gold, which has not quite recovered, but has recovered some. Bitcoin has continued to fall from that drop. So these were the drops there, if my head's not in the way, there and there. And they just kind of continue to make those moves down. And it is, in my opinion, very reminiscent of sort of what happened here. The news is announced, confirmed, whatever. The markets start to react. But then that one, sorry. This one here in April or August of last year. But we still have plenty of falling still to come. I was just double checking it was that date, right one. So I think there's definitely something that we need to consider, and let's not even take into consideration there's a potential topping pattern here. We did, although we've recovered it slightly, the 50 EMA about to break here. It wouldn't surprise me for the carry trade, if it does end up playing out, for us to see that kind of correction down there, and from it's 10% from the top, about 10% from price back end of last week. And I think that is, that will have a massive impact across where Bitcoin goes. But ultimately, that could be where it is. Now, when I talked on briefly about it, short-term volatility, and this really is short-term volatility, because using again the NASDAQ as the example, we start to try and squeeze everything in so you can fit more data, and you can just see how quickly, these drops. And I've got to try and find them again. Here we go. There was that one earlier in the year as well. There. Just how quickly they happen. It's hard to put a time on the one from January because of the tariffs. But even if we just did this first bit, we're only talking about sort of 4 weeks until recoveries are made if the bull market is to continue. And so for me, that is a short-term time frame. But it is something that we may need to consider. The other thing that perhaps we just need to consider, unfortunately, is the timing of this one. Because this is probably the last full week of trading this year. There will be some days dotted before Christmas and then between Christmas and New Year. But ultimately, this could be the last week. And so if it is perceived to be negative, then we're having very limited interaction over the next week and a half, 2 weeks. And whilst, okay, the markets, traditional markets may may stem that fall. Unfortunately, Bitcoin's 24/7, and if the momentum continues down, we may just see, because there's no breaks from the traditional market to help sort of ease that concern, that this may continue to ultimately fall all the way through. Now, I haven't even, because we don't have time, but have a chance to have a look yourself. Two things. One, the Japan just elected a new prime minister, and they're effectively producing a bailout, for want of a better term, just to try and stimulate growth within the market. I think it's like $113 billion, not yen, dollars worth. And that's been done through debt issuance, if you will, so bonds, etc. And so it's not through taxation or anything else. And so again, we talk about they're already trying to curb inflation, and then a new prime minister's come in and started just printing money like it's no one's business. They're going to have to keep these rather extreme measures in place to try and control the real inflation, the first time which they felt for the last 30 years. You could then throw on top of that things like Warren Buffett, who has sat in cash for absolutely ages. And now it turns out that actually Berkshire Hathaway has been buying incredible amounts of Japanese stock, has been buying, is waiting potentially on the sidelines. I think he's in this article, he goes into just say he's pretty much given up on the US, and he's sort of considering moving the vast majority of his cash over into the Japanese yen. And when we start to actually have a look at, not that one, some of these charts now, as I mentioned, the dollar value is falling, okay? And so, it's below 100. So ultimately, the parity, arguably, you could say, you're only, 97, 98? You only get 98 cents for every dollar that you ultimately have. So that is falling. And he's looking at, on the other side of it, the yen, which has shown considerable amount of strength at the moment, looking to potentially try and invest in that one. I've got this one the right way around. Japanese yen, I think I should have it the other way around. We should actually be looking at it going that way. So for me, a couple of things to kind of have a look out for. When the news kind of gets announced, there's a couple of things that we can see. So we have got the dollar yen on here, and I'll kind of zoom out again so you can kind of see. But we've reached a relative high on this, sort of almost 160. And so what have we seen previous times? This here. Oh, that was poorly drawn. Let me just put it on the weekly. I think it's just going to be easier to see. Let me zoom in. So, last carry trade unwind, this is what happened with the dollar yen. The one in January, this is what happened with the dollar yen. So, that bearing in mind, if we start to see this dollar yen moving this way, and for me, I just marked off 153. I think on the daily time frame, it made a bit more sense with 50 EMAs and a few other indicators. We start to break that level, we can seriously start questioning whether or not we've got some evidence to suggest that the carry trade is unwinding. Similarly, you could have a look at things like the Japanese yen ETF, which again, during periods of carry trade unwinds, we had these moving from their lows massively up. So this was August, and this was January. So again, we could start to consider, and if I do move this onto the daily, you can see the 50 EMAs where the line is. I'll put it back onto the weekly. We start to break that level there over the next week or so. You could also argue that we are potentially seeing another unwind happening. Now, these are weekly timeframes. Around about 8 weeks, we kind of see it top and then look to sort of correct. So there's certainly something to consider there. Now, what am I doing, and how am I really playing this? Where's a chart that I can actually use? Not those. Sorry, just try and find a normal chart. We'll just do this. There was an article in there I was going to talk about. Let's go on a clean chart, and let's just remove that for now. I think for me, Bitcoin's at a rather important level anyway in terms of support and resistance levels that we're going to ultimately talk about. We know I talked about this before, blue in the face, below the 50 EMA. So we start to see some breakdowns. And even if you were to use the low that we made back in November as sort of your absolute drop dead date, it's not that far off, unfortunately, where we are. It's only about 10% of where we currently find ourselves. And, previous, as we've seen on this one, previous drops from the carry trade have been, let's just be conservative and call it 27%. One was at 23, one was at 32, one was at 27. Hey, let's just call it 25. And again, being conservative that our price action starts today rather than actually on the announcement, because we don't know where it'll be. 25% drop. It's going to take us, down to mid 60,000, sort of 65,000. A huge level to be had there. So I would be watching. I'll probably be watching a higher level than that, but certainly if you wanted to just sort of take out that consideration of that low there, if we lose that suddenly on Friday, and you can see, 1, the VIX climbing, 2, the dollar yen dropping, 3, even if you want to have a look at that Japanese yen ETF rising quite suddenly, obviously other markets falling down, you've got a clear indication that something's happening there. I would argue there were probably higher levels up in Bitcoin that you'd want to be monitoring just because of other TA out there. But that's one that we have to consider. And even from that level, we could still see potentially $10,000, $15,000 drop down from there. And now we're talking about, lows, significant lows from our tops. But we'll worry about that as and when it ultimately happens. Sorry, I've missed a couple of things here. Live parenting, yep. Next level of imbalance flow. We'll have a look at that in a moment. Surprised to see the UK second. I think BT is back above the internal range EQ. Now is not the time for bearish, in your opinion. I just see, saying what I see. I will go on to bullish sentiment as well, but for me, I want price to prove itself to me. You prove yourself, you get above significant levels, and absolutely fine. We can start having that conversation. But right now, I can't see how anyone is not thinking that the bears are not in control. Now, that control may be waning. I totally get that. But you've got to prove it with price action. That's how I kind of take it there. I just need how to close out all these positions so BTC can hit 200K for me. Done. Deal. I'll get it done. Right. I think we'll just get on to talking about some Bitcoin price action. Final thing on the carry trade. It happens on Friday. If I can, I'm going to try and do a live, not when it happens, but sometime in the afternoon. Just got school kids and all that. We'll hopefully get some opportunity to do that, and we can kind of sort of see what initial reactions the market is giving us and any further clue. I will say I personally agree with where the poll is at. The volatility is inbound. I don't believe that it's priced in. I just think that's more hopium in a market which requires hope. I mean, hell, fear and greed's at 11 at the moment. This 11 is pretty much as low as we've got in this entire drop off. Over the last year, we've been down at 10, middle of November, and then back at the February. This is even before the tariffs. It was kind of on the announcement of the tariffs, but we are right down there. So I get that people are hoping that it is already being priced in, but for me, the level of fall that we normally would expect has not happened yet. The sharpness of that fall for us to say that has been priced in. And hey, I'm happy. Trust me, happy to be proved wrong on that one there. Okay, looking at Bitcoin, 12-hour time frame, the usual sort of charts that we do. And I think Alan Crypto Wonder posted something in Discord, kind of similar to what I'm showing here. We've got these kind of liquidation heat map zones. The ones that I use effectively, this one was down here until last week, and it got eaten up. So it's round about sort of 94.5, 95,000, and then that one down the bottom in and around 82, sort of kind of where price basically sort of found its bottom in November 21st. And we're in the kind of mid-range of that at the moment. No clear discernible direction from where we're going. And ultimately, I look at this, unfortunately, and say, well, even within this pattern, we've kind of had some sort of range. We are to the lower side of this. We are below that fib level, the 1.414, which again, I've had this on my chart for nearly 3 years now. They're playing out pretty well. And if we can't break that, I'm sorry, but retest and just continue that step down into that liquidity zone, maybe then sort of getting some kind of bounce off the 1272 level, and that's fine. But other than that, that's just ultimately where I kind of see those going. Yeah, there's an article here which was similar to the article that I closed about Bitcoin dumping below 70k thanks to Japan's carry trade, and that was kind of utilizing that sort of 27% average that I showed you on that tweet from Mr. Crypto. He was the one that was cited in the articles. I think he might even be cited in this one. Maybe not. Anyway, similar kind of impact, so 21, 25, 20%, taking us down to the 70s. Okay, fair enough. I've already alluded to fear and greed at the moment is at its lowest it's been in a while. And I still stand by, although it doesn't give you a time frame, buying in extreme fear is generally a very good place to buy. It doesn't mean we can't go lower in price, but if you've got a long enough horizon, you'll normally look back at that time and say, normally we're back at that time and say that was a good opportunity to buy there. In terms of our canary in the coal mine with Bitcoin's ETF, IBIT, didn't buy anything yesterday. I still stand by it. There is obviously some interest within this. It's not the level of interest that we've particularly seen in the market, but purchases are being made. And I don't necessarily have an issue with the fact that interest has started to drop off. We're talking about sophisticated institutional investors here that are very happy to move from one asset that is happy to pay dividends to another. And right now, Bitcoin isn't really the flavor of the month, as I alluded to earlier. Yes, it's a risk-on asset, but it kind of also needs a bit of je ne sais quoi to kind of give that confidence into the market. And once we start to break into those higher 90 levels, back above 100k, you will see, as silly as it is, institutional investments come back because they'll feel that they've gamed it the right way. But there is still some interest in there. Now, BlackRock hasn't made any moves yet today that I can see, except for some movement of Ethereum, but from a Bitcoin point of view. But as always, we can't track every single wallet via this. We'll just wait until the sleuths that really do track them just update this chart here tomorrow. So let's kind of continue some of the TA we were doing on Friday. And unfortunately, there's bearish stuff in there. There has to be. I do have some bullish sides to things as well. But this is very long-term here. This line loosely on the weekly time frame connects all of the tops from the previous bull markets. And yes, okay, we broke through it here. And I accept that, but just giving us a rough indication of where we have seen. And then there's this, base support for the bull market year. This is on the linear chart, I should add. Price actions come back, retested this a number of times. We did lose it. And then you could argue we are in the process of a Kobo. And even on this weekly time frame here, let's just get rid of this. I'll tell you what, keep that one. Let's get rid of this top one. I mean, strong move down, bounce back up into previous support, now resistance, major support, weekly time frame, lasted the entirety of the bull market thus far, and we've rejected, and we've hit it 3 times in 3 weeks, and we've rejected from that, and I dare say we lose on a weekly level 86.5. This is going to look, as I mentioned, very similar to dead cat bounce or whatever it is that you want to ultimately call it. And for me, that is why I can't quite get on the bull market wagon straight right now. I haven't sold everything. I'm trying to give it some hope of where we currently find ourselves. But yeah, 50 EMA on the weekly time frame. We have been under it now for the best part 1, 2, 3, 4, 5 full weeks, and then whatever this week has been, and we look no closer to sort of closing above it. What's it currently sitting at the moment? 98.5 is where it's at. It's given us a chance to get back to it because at one stage it was 101, but we have now got to climb another 11,000 to get to it. And that's not impossible, you know, I accept that. But until we get above there, I'm always going to lead these discussions with bearish sentiment, because I think that's just the best way to play it until we're proven wrong, especially as we're still in the market. Let's just try and convince ourselves of why we should be still in the market by looking at some of the bearish sentiment from things there. In terms of bullish side of things, if we're going to just talk big picture before we get into the smaller time frames, and we're going to use previous market tops as a negative, well, we can look at previous market tops and key points within in this bull market is to actually say, you know what, we found this support, and we have. Like, I appreciate it doesn't line up perfectly for those fanatics out there that has to have every single top lined, and maybe I could sort of line up this wick and sort of just move this wick down and get it there. But you get the general sentiment that oops, thought that, you know. And then 5 very significant touch points. Each of those touch points, actually 6, if you include the 2 that happened this April or this Easter. Each its key points within Bitcoin's journey, if you will. So an all-time high here, an all-time high here, an all-time high here before we ranged for 9 months. Then we had the, you know, broke through it, brilliant, you know, off the Trump rally in November, came back down, found it as support for a month, this line, found it as beautiful level of support for a month, flew back up, hit a new all-time high, and then we corrected down, quite a significant correction, but again, a very strong bounce from hitting this level here at around about sort of 80,000. And whilst I'm ultimately, well, whilst I'm concerned about where we sit in the market and should we be, you know, more bearish, this is the one thing that keeps me in the market, because we haven't lost this level. And maybe I've moved the goalposts ever so slightly there. Maybe I'm just sort of softening in my age, because before it was a couple of weekly closes below the 50 EMA, but I can't ignore this here. And so, yes, okay, I'm not happy that we're below the blue line, the 50 EMA, but as long as we stay above this yellow key support line, I'm always going to have a bit of hope. I'm always going to say, actually, there's plenty of potential for us to see that climb out of here. And so I will continue to do that. And okay, it's only $7,000 away from where we currently sit. That's fine. But until we lose that, until we lose that, I'm going to suggest that I'm going to keep what I have. I may do a little bit of sidestepping and trading and everything else, but I'm not running to the Trezor to open up every single wallet I have and just sell. And that will continue to be the case. Now, we lose this, then yeah, I think we do have to, you know, seriously have to have that conversation. A loss of that level there will be a continuation of this down drop. After we've gone up, okay, we didn't quite get rejected at 50 EMA, but we made an attempt up to it, and we were knocked down before we could even get there. A fairly strong fall back down. And so you could make the argument, if I can clear this up, maybe I have to drop it onto the daily. We will go on to the other charts in a moment. But then you could suddenly make the argument up that we had that top, then we had the pullback, we had the complacency rally, which just ultimately has failed, but nobody's bought into it yet, and we move back down. And if we ignore simple TA like that, which is staring us in the face, because we hope, and I hate that word, we hope it's going to be different, then I think we'll only have ourselves to blame when we finally do decide to get out sub 70,000 and just take whatever we have, and then just see where the market and the dust settles, ultimately maybe only making, you know, 50,000 might be the bottom, but we don't believe it. By the time we get there, we get him back in at 60, and we've only really gained that $10,000. You know, having the ability to have a bit more critical thinking from what we see, I think is the key. Now, even on my very rudimentary drawn bear flag here, you could still argue that, well, we haven't actually lost this level either. We found a bounce. When we get this bounce, we bounce back up. So, okay, then I want to see us break that 98,000 level. And if we get to the top of this range again, I'm going to draw it properly. Sorry, I'm amateur hour here. Yeah, sort of that kind of level there. Let's get rid of this one. Almost embarrassing how I was drawing that. It's on the daily, this one, so kind of like that. Suppose we could ignore the wicks and get this a little bit better. Sort of like that. So we came up to the top here, 94,000. That's what we'd be looking to break through. We break that 94,000, which would break these little wicks and these little highs that we've had here, then absolutely fine. We also then, as we talked about on Friday, would have that. We would have broken that key resistance in that move on the way back down. And again, what I said to you on Friday, and trust me, I didn't act on it either, is we were rejecting from that. Yeah, get rid of this. We were rejecting from this resistance level, which we have now rejected from. We found a temporary reprieve at the moment, but even any move up, we're going to run into this again at 90,000. And please, for the love of God, if we reject at 90,000, just have a word with yourself about, even if it's a short term, just, take something off the table to give yourself an opportunity to reuse it later on. Anyway, this I saw posted so many times on Twitter today, and I can't recreate it on my own chart, so we're just gonna have to believe it's there. It's a global master macro investor. For those that follow Raoul Powell, or however he pronounces his surname, these are like the presentation slides that he uses. I can't remember what the actual presentation is called. I think I saved it somewhere. Maybe I didn't. I don't think I did. Anyways, whatever it is called, I'll find it and I'll repost it up there. But what they're highlighting here is we've got Bitcoin's price in black. We've got these kind of pink boxes over the price action sort of periods of ranging, and then what we actually have are these vertical sort of reddish pink lines where the Bitcoin 14-day RSI, which is shown on the right hand side, hence the RHS indicating there. And as it drops down to the sort of sub 30, that oversold level, we find that typically is an area in which we bounce. I understand the logic within that, and I get it. What I would say, and I'll have to get this pen on, I'm gonna have to change the color, just bear with me, is it's not an immediate bounce here. Doesn't mean that we're going like that, because actually, if you look the previous times, all the previous times, the first time we entered into this, we then went through several months of ranging as we started to effectively get a bullish divergence out of this. Price continued to fall whilst the RSI climbed up, creating a bullish divergence, and then we climb out. So if this is an indication of past performance equaling what's going to happen now, we've got a couple of months potentially sitting in and around this level before we can find that momentum to build out of there. And so I see this as a bullish-ish indicator. But 2 months time, we roll on 2 months. Let's just call it February. Topped at the beginning of October. That's October, November, December, January, February. That's 5 months. We could actually call that a bear market. We really could. And then start to climb out of it. And everybody that believes in the 4-year cycle being dead and the 5-year cycle being a thing, they'll ultimately be proven right. They'll ignore the fact that we went into a bear market, of course, but they will be proven right. And just one other thing that is all over Twitter at the moment is, and I'm not directing at Quinton, I just took a snapshot of his. It's all over the place. Everyone sort of shitting on Bitcoin's performance in 2025, year-to-date returns, and sort of emphasizing gold, silver, NASDAQ, S&P 500, all positive. Bitcoin -8, so it's crypto without the toe, so basically cry. But I think that's an incredibly naive way. I mean, if most of us in the group have been in at least since 2023, Bitcoin, since its bottom in 2023, the price action now, not even where it topped, 466% return. Almost what, a 5x in terms of where it's returned from. We can do this all day. Even Ethereum. Oops, no, we can't do it all day. I thought Ethereum adds on there. It's not. Let's just draw it up then. We get rid of that. So if we did it for Ethereum, November 22 to price action at the moment, you know, nearly 3x its price from where we find ourselves today. Don't see gold having 3x itself. We have a look at Solana. Oh, apparently I've saved none of these. That's good to know. So, you know, this is up 13 times. Yeah, almost 13 times. 1,188%. We were down at $8. Even now, we're at 125. If you're one of the lucky ones to get out up here, it was, you know, nearly 2,600% returns. Similarly, XRP, I mean, everyone gives XRP a hard time, and I'm one of them myself, but we take from the same point to where we are now, 530% return. Whereas if we look at things like the NASDAQ, from that same time period, it is up, but it's 140%. So kind of, you know, on parallel, I suppose, not even to ETH, actually. I was going to say to ETH, but not quite. If we have a look at the S&P 500, again, it's almost doubled if you'd invested in that. And gold, 167%. So, you know, I'm not shirting it and saying that's not a bad return. But the reality of it is silver done probably the best at 270%. The reality of it is they're judging it on 1 year rather than 3 years that we have seen. And so, yeah, well done for those that are into gold. Well done for those even more that managed to diversify at the right possible time. But for those of us that just bought and held Bitcoin for the last 3 years, we can't exactly kick ourselves too much. We have had a fairly decent return, 5x from our positions if you were able to get in at the lows. And, you know, we got a bit in at the lows there, but generally the majority of our buying was sub 23,000. So even that is pretty much a 4x from where we find ourselves. So I sort of take what they're saying and I say, yep, gold, you know, you've taken enough shit from Bitcoiners over the last few years, so fair enough to throw it back. But actually, in the past 3 years, we have done way better. And God, if we went back 10, 15 years, the difference is night and day. So just something to ultimately consider there. Right, let's get into Bitcoin Tower and some of the other ones. Apologies, I've rambled on for 50 minutes already to get to this point. Right, okay, so this is some of the TA that we had from Friday, and actually we didn't get what I was hoping for, was sort of that move to the 50 EMA, and maybe even taking that liquidity there. You can kind of see we rolled away pretty much after the call on Tuesday from the EMA cloud, and what we had broken that trend of that 10 and 20 EMA just holding us back, we have now fallen down through. And what we were talking about on Friday was we've still got this level of support, and until we break that, then there's an opportunity that we're going to bounce. But we have now broken it. And for me, even on a very small time frame, this now is the resistance. And assuming that we can't break through it, where's the most logical place we're going to come back down to? For me, it's the 800 EMA. It's going to be that retest in and around 82,000, which ties all the way back into conversations we were having. No, I can't find the chart here. This extra little bit of liquidity. Sorry. Thought that was going to be taking us there, maybe having that opportunity for that bounce off that fib level down there. So that's kind of on the daily time frame now where I see things are going, and we have to now start all of those battles again with the 10 and the 20 EMA. They're pretty much on top of each other, so you can kind of call it. We haven't actually had that retest of the 50 EMA for some time. It's now currently sitting at about 95,000. I thought we had the momentum to get through to it on the last one, which is why we drew that arrow up there, especially as we'd cleared the 10 and the 20 EMA. Now there's a lot more work for us to get through to it. It is obviously still possible, and should we get there, we may see that wick taking out this final vector candle. But in this ranging pattern we've had here for the last 2 weeks, we've not really seen that level of increased volume to leave any vectors in the wake to kind of sort of draw us towards it. And so what people forget, because I don't show the wicks, I just show the bodies, but ultimately that wick all the way down to here is an unrecovered vector. There is still, you know, trapped liquidity, if you will, right the way down there. And I'm not suggesting it goes all the way down to basically 80,000. I think that 800 EMA daily time frame could play a part. But till we break now through this, and it is just all about small steps, isn't it? Till we get through that's where I'm seeing it. Now, if we go down to some of the lower time frames, let's just clear all of this noise off. we do have some noise. We do have some vectors and the ability to maybe start to recover some of these. This was where we rejected before. So this is the 200 EMA on the 4-hour time frame, and it's acted as a fairly decent catcher. I mean, pretty much, what's this, October? And we haven't had many opportunities to get to it, but it has rejected strongly from those. But the 50 EMA has, I mean, it's a bit like the 10 and the 20 on the daily time frames. We've kind of just broken through it. We have lost this here, but within this range, I mean, except for this little tiny bit we couldn't get today or yesterday, we've recovered these vector counts. I think there's a very strong possibility that we recover these. I'm not saying we get to recover all of them in one go. But just given the amount of vectors we've seen in the past, and they've all managed to be recovered through just the chop, I think there is an opportunity we do that. We could well see that move coming in, especially if the narrative continues that Bank of Japan issue has already been priced in. Maybe we get that hopium to come back into the market. It's the hope that kills you for Friday. We'll wait and see on that one. I think we talked about that enough. But these vectors certainly here, I think, give us an indication. The fact that we didn't take this tiny little snippet, maybe we come back down for it, but we bounced quite strongly off that. There was some positive jobs data today, which, you know, kind of sort of building into the narrative that we might get another rate cut next month. So that certainly helps. And for those of you that saw when those announcements happened at 1:30 and then some other news at around about 2:45 UK time, you can sort of tie in with where the market kind of saw those moves come back up. Yeah, I think the vectors are kind of the only thing that really holding us there. I would say down on the hourly, I mean, it's same on the 4-hour, but you can just see it a little bit better on the hourly. We're having this nice little battle with the 50 EMA at the moment. You know, a decisive break above that. We've got a nice little vector to attract us to it, but we've then got this, haven't we? Which 200 EMA here, it's the 50 EMA on the 4-hour time frame. You know, that's the work to get through 80. Let's just go 89,000 by the time we get there. I think it's something to have a look at. But yeah, I think there's a lot, unfortunately, in our way. And so we need some really positive kind of momentum to get us through there. We need to see vectors on the daily time frame. We need to see that real inflow of buying that can get us through the 10 and the 20, which, you know, they're not the most difficult to get through, but really to get through and stay there. And we always talk about breaking a 50 EMA with a vector. That's what we want to see, and then building from that. In terms of bit sensor, I'm going to need a drink for this one. Someone posted in Discord today, I think it was Darren, and he talked about a consolidation period for bit sensor. But let's just start super big picture. I mean, can we be real with ourselves for a second with bit sensor price action? In 3 months' time, bit sensor will have not made a new all-time high for 2 years. Matter of fact, depending what happens over the next 3 months, if bit sensor doesn't get above 790 or 780 within the next 3 months, hell, if it doesn't get above 500 in the next 3 months, we would have spent the last 2 years, so from here to here, in a downtrend. I mean, that's what it has been. I hadn't really bothered to look back this far until I saw that post today, and it's the first thing that kind of stuck out in me. I think that's an issue. You know, we had the Binance listing here, and then since then, we've had some rallies, but none of them have created a higher high, and we have just moved. And so we've gone from 780, even at lofty heights of 600s. We haven't seen 600 in over a year. We haven't managed to close on a weekly time frame above 500 in almost a year. We have been in this downtrend, and you know, when the post-mortem of this bull run comes out, I think certainly for me, my insistence on, you know, being committed to bit tensor will probably be misguided. That's the reality. I think there would have been other things that I probably could have chased better. We are where we are with it, and that's fine. And I appreciate some of you are in bit tensor and the bit tensor ecosystem for things beyond price action, and that's absolutely fine. But in terms of sort of how I try and play the market, I kind of question whether or not I have actually played this one correct. I suppose time will tell. Now, I didn't mean to necessarily draw that line there, but it's a fairly decent representation of the bottom of where I'm currently thinking price action is. Weekly time frame, please bear it with a pinch of salt. But we are at a precipice point here. This sort of like 260, 250 level weekly time frame. We've seen it has held us, but if we can't hold this, and maybe we are due a little bit of a bounce, but if we can't, I think we get down to the low 200s. I think we honestly do. I think that randomly drawn straight line that I've just done there, connecting a few of the previous bottoms, I think that has to be seriously considered. And when we go down the daily time frame, I think the picture kind of looks even worse, unfortunately. We've similar to Bitcoin, slightly different time frame that it's happened. Strong move down. We've just ranged sideways. We've had a bit of an attempt to get back up, but every time we've been rejected. And now we find ourselves, let's get rid of that as well, in an area which, again, very low liquidity on the daily time frame. And we've got 3 hours left today. If Bitcoin closes below, BitTensor closes below $264, we'll have made a new low in this range. Now, if we rally up to say 270, there could be an argument for an inverted head and shoulders, and we'll all be talking about that. But right now, with 3 hours to go, we're actually about to put in a new low. Now, what does that mean? That means we may get another move back up there before another move back down. And I just worry with the wider picture of crypto and sentiment and everything else, and a lot of altcoins are looking similar to this, that there may be, unfortunately, that rollover. And if there is, we've got to look for where we can go. And funnily enough, on the daily time frame, there are some vectors down there. And that is not a far, 254, which is kind of the 256 the lowest we put in, down to 220. It's not that far. $36. It's not that much. We've fallen that in the last 3 days. So we can easily do it again, unfortunately. Now, in terms of the route north, like Bitcoin, the 10, the 20, the 50, the 50 and the 800 and daily, just on top of each other now. 200 is also coming into play. There's just such a difficult journey for us to have. And that is why I am not in BitTensor at the moment. That is the truth. We've moved on. I do concede that there is a possibility of a bounce right now. But those bounces are generally short-lived. They can be quite difficult to time. And if you're at your computer, then go for it. But if you like me now, where I've got to actually parent because the kids have broken up for school and I've got to do activities with them, I'm kind of just thinking, well, I've got to have to wait till we get above this noise and stay above it. I mean, really, we need to get above the Gandalf line at, sort of 315, where the 50 EMA and the 800 EMA are currently sitting. But I'll take right now getting above 296, staying above 296 and building up from that one. That will give me at least some indication that we're actually getting somewhere. Hell, actually, now we're down the 4 hour. I'll take staying above and building off 285, let's call it. And starting to see price building up some sort of level for a move up there, and then taking out that 200 EMA with a vector. And again, the 200 EMA has acted as a fairly good level of resistance at the moment. We didn't quite get to it here, but we were pretty close on that one. And then rejections, plenty of them, unfortunately. Down we go. Now, there is potentially hope for a short-term reversal and a recovery, but I would be mindful that the 50 EMA on the 4 hour time frame, just double checking, is at around about 280 and just seeing what it's done there. Now, in this range, we have broken that before. And again, similar to what I said with Bitcoin in the lower time frames, within this range, we have recovered every vector. We've recovered every vector now for nearly a month. And so the odds are that at some stage we will look to recover these. But it doesn't mean, unfortunately, that it's going to last. And that is, for me, just the whole reason when I said total 2's not looking good, total 3's looking diabolical, others aren't looking good. Just generally the liquidity and the length, the breadth of the altcoin market just isn't there, and we can hold on to that hope as much as we want. But I just want to go off what I can see. And I accept we may get a short-term bounce, but generally the journey for BitTensor has been down. Okay. And it's been down kind of since we've been in on it. Some of us got in at sort of 175, and if you were like me, it was kind of like 220, but I was still buying at 600 as well. I wasn't immune to those high buys. But when we look at this, I'll put on the daily. I was wondering why I couldn't stretch any further. It has been this. And if Friday plays out into next week and over the Christmas period, and if we see traditional markets and Bitcoin fall, traditional markets, that sort of 10%, double figures, Bitcoin 20, maybe more, what do you think it's going to do to altcoins? With the exception of sometimes Zcash, which doesn't really do what Bitcoin does, most of them are going to follow suit, and they're going to follow suit a lot harder. And so, yeah, I just don't feel particularly comfortable with the risk ratio for this week into next week, whatever. Me not really being at my PC, I've just been sat in BitTensor. So that's kind of where I sit with it. I wish I could see a better picture for it, but that is honestly where I am. Appreciate that's not what people want to hear, but I'll just say how it is. And hey, I would love to be proven wrong. I would happily lose from 260 to 300 if it meant 300 to 400. I think we all would, because there's an opportunity to be had there, but I'd rather just wait to see that happen and just be protecting that portfolio a little bit between now and then. Having a look at Ethereum after bigging it up, we saw that reject, 250 EMA rejection just couldn't really hold. But unlike Bitcoin, the 800 is coming into rescue, and we haven't lost. I mean, I've just had to. It was originally that, so maybe I'm tweaking it down to hitting the wicks, and we bounced off that. But there's an argument to be made. There's some limited support at the moment. I think I'd go more on the 800 EMA than anything else. But fairly tight range for Ethereum to be in, and it's still being a much large player within the altcoin market. You can kind of see why Total 2 is still struggling. And even if we do see a move up, what do we get to? Maybe 3,200 before we have to have that conversation about where the 50 EMA is going to knock us back down again. It's been doing it for the last couple of months. And so, yeah, I don't know. I'm not really buying it. BNB still looking, wow, it looks better than Ethereum, but ranging out, potentially a bear flag there. Link, again, looking pretty poor. So I'm going to have to rearrange it. It's all on the daily. You kind of get the point. So $12 is really, lose that. I think the journey down is about 8. Near, just sliding down. Solana, again, sliding down, making lows. S&P is just one I used to hold, but don't now. But again, that's feeling like it's certainly coming back down to at least retest 46. And then it's just, clench your butt time. And then XRP, we talked about this coming back down and retaking. It's not quite there yet, but retaking this wick down here. Whilst others were thinking we might bounce, this one is just totally being controlled by the 10 and the 20 EMA, very similar to most of the other altcoins out there. And it's just how the whole market is currently playing. I imagine if we go on Total 2, that's it. That's the altcoin market for you there. Looking quite similar to Ethereum because of Ethereum's size, but still not looking like it's ready to do anything. We need that move there to be a vector, a strong influx of volume, of liquidity there, nice blue green candle, whichever, taking us straight in instead of just building on these dull gray candles which will run out of steam at some stage and we'll just see it roll over again. So yeah, for me at the moment, especially sort of where I see the end of this week potentially going, I think it's more about just asset portfolio preservation, and yes, still exposed to the Bitcoin, but I think I can just ride the rest out, probably get another opportunity to take that one in. So that's kind of where we're going with that. In terms of some of the other things, gold still looking pretty good, absolutely. Not a new all-time high, but getting close. Silver, I think the silver is looking a little overextended in my opinion. And we'll be talking about things like pullbacks to sort of 55, 56, which although would look horrific there, bloody hell, that'd still be fantastic. So the way precious metals are going, I would not be surprised to see this continue, but it does look overextended, in my opinion, and we maybe can see that's coming back in some of these other assets. Coinbase, kind of reflective of crypto at the moment. It's at a dead cat bounce. We'll see. Circle, similar. We're starting to see that fall away. MicroStrategy, I mean, is anyone getting life support out for them at the moment? I said it gets below 100, it actually might be worth buying. And we'll see where we're there. But, you know, we're starting to get to levels now where there's not too much support coming back into this. We're going to be sort of like 150 and then maybe starting to talk about sort of 120. But yeah, strong fall away there. Nvidia's having a bit of a pullback and consolidation, whilst Palantir is actually starting to climb back up. TauX, it's at this base, you know, we've been here before, we need to see a bounce, but I'm not holding out hope for that one. Tesla's looking very strong. Don't know if that's off the back of the SpaceX news, you know, there's sort of some weird kind of anything positive with Elon just reflects across all of his companies. We'll have to wait and see, but it's kind of there. Even, I mean, we don't often talk about it, but I've just seen it. Casper had that strong move, but it's recovered it all. I mean, look, you know, this last 4 or 5 days, just recovering that vector, that strong move up. And so, assuming sentiment doesn't change, why is that not going to get recovered over the next couple of days? I don't have an answer for why that wouldn't be the case. And that's kind of where I see things. I'm sorry if that's not the most positive way of looking at it. The fact that you tune in, you probably heard me talk in that way for a little bit. I'm not here saying absolutely categorically the bull market is over, but the bull market has to prove itself for me. It has to actually go out there and show me when I can get this chart loaded up. Come on. Right, here we go. It has to show me where we are. Where, you know, where are we? Are we just this side? And, you know, we're in a bit of pullback from the thrill we had, you know, of 126,000, which had that pullback. Or are we this side? We don't know that the top's in yet because we've been told that it can go higher for longer. And actually, we're about to either experience a complacency rally or we already have experienced that. And you know, for me, that's kind of where it is. And I want to believe, I hope, that word that I hate, it's this side. But most of the other evidence right now is suggesting this. But, you know, as I've said many times, well, not many, but times with this point at this peak, it's so hard to tell where you are. So don't jump to conclusions either way just yet. Give yourself a little bit of breathing room to make that decision. But because of some of the factors of where we are with TA and price action, I just want to question it the whole time. And I'll continue to do that. And I'll continue to do it until you're so bored of it, people actually start telling me to F off, which is more than happy for that to happen. Right, I think that's enough. Nearly an hour and 15 minutes, way longer than I thought we would have talked about. Thanks for those of you that tuned in. Sorry, I missed that last one. Inside weekly candles and with no close through the weekly. I missed where that was. Apologies there. I'll try and go back through and sort of see where those messages came up and I'll try and comment on them. Yeah, appreciate everyone tuning in. Appreciate people putting up with that. Sorry, I kind of lost my way a little bit with the Bank of Japan narrative. I had sort of an idea in my head what I was going to talk about, and then seeing my son get out of bed, I was like, God damn, he's going to walk in. But he didn't, thankfully. God knows where he went. Enjoy the rest of your week. There will be a trading pub Thursday afternoon. I will also try and get live on Friday afternoon. Next week, I will do one on Tuesday. I'm obviously not going to do one on Boxing Day because I'll be hungover and just full of turkey. But I'll talk about that a little bit more next week. But yes, I will do one next Tuesday. And I say, planning to try and do at least something on Friday to see where it happens. As always, you've got any questions, feel free to tag me. Any of your comments, anyone that actually disagrees with what I've said, please tag me publicly in it in Discord and we can have that conversation. I'll be more than happy to do that. But other than that, enjoy the rest of your weekend or the week even, and I'll speak to you all soon. Cheers now.